Welcome back, Wealth Builders. Thanks for joining. Today, we're going to talk about whether or not you should invest in Tesla. Before doing so, please remember, like and subscribe. As a reminder, I'm not a financial planner. I'm just someone who received a formal university education in investments and financial planning and would like to share financial education with you because anybody can build wealth over the long term. So, should you invest in Tesla? Before spending your hard-earned cash to buy Tesla stock, there are some things that you should consider. In full disclosure, I don't actually own any Tesla stock, but I do own an exchange-traded fund that does have Tesla stock included as part of its holdings. And because I'm not a financial planner, I can't tell you whether or not you should invest in Tesla or that you shouldn't invest in Tesla, but I can tell you what is some of the things that you should consider before investing in Tesla. So, one of the first things that you should consider is how does Tesla fit into your overall investment portfolio? And how does Tesla match your investment risk tolerance? Do you already own Tesla and are looking to add more to your position? Or are you looking to invest for the first time? Do you hold any investments with some of its competitors? Do you already own some Toyota or GM stock? Or what about some other electric vehicle makers? Do you have positions in any manufacturers of batteries? If you already do, you might want to consider whether or not you already have exposure, or by buying Tesla shares, will that make you overexposed? You should be aiming for diversification. Being overly exposed to one industry is never a good thing, because if that industry does well, awesome. You're going to make out like a bandit. But if it doesn't, then your investment journey is going to end up being a short one. If this is the first stock you're going to buy, I recommend you look at exchange-traded funds. If you're just starting out, only because you'll gain diversification, or at least you'll be more diversified than just owning one stock. I've got a separate video on exchange-traded funds. I recommend you watch that. But for right now, we'll just stick with talking about Tesla. Another thing to consider is what amount of risk you can take. Tesla's stock price history has been a tumultuous one. If you're going to invest in Tesla, you have to understand that it's a relatively new company and price moves will be erratic. You're also dealing with Elon, who's eccentric to say the least, and his statements have been known to nudge investors' perceptions at times. You should understand that 2020 was a great year in terms of price appreciation for Tesla. Some argue that the price is overvalued given the amount of speculation and first-time investors that have driven the price up. It also experienced gains after being added to the S&P 500 index. Will it run out of steam, or are we just not seeing the full potential of Tesla, which warrants the current price? That's still to be determined. One of the best things that you can do if you're a wealth builder is to learn how to perform fundamental analysis. So let's look at a few things as of December 16th of 2020. Tesla's total revenue continues to increase at a consistent pace year over year. That's a good sign for a newer company. The cost of revenue is increasing at a similar pace with total revenue and operational expenses. Net income is on track to return to profit for the first time in 2020. And I know at first glance it doesn't sound like a good thing, but it's good that a new company is on the road to being profitable. The question is, can Tesla sustain this trajectory? So let's look at some more factors. Let's look at the price to earnings ratio. For those of you that don't know, the price to earnings ratio is a quick way to indicate whether or not a stock may be under or overvalued. This is not the only factor, so please don't kill me in the comment section. But it's a factor frequently used as a rule of thumb. You take the price of the stock and you divide it by the earnings per share. The earnings per share is the amount of earnings or profit generated by the company divided by the number of shares outstanding. So again, it's just a quick way to measure whether or not the price of the stock is under or overvalued relative to the amount of profit that the company is generating. As of today, Tesla stock currently trades for $643.28. The earnings per share is 52 cents, resulting in a price to earnings ratio of 1,210. So Just to give you some context on how that compares to other companies, let's compare it to some of its competitors. The price-to-earnings ratio of the maker of the best-selling sedan, the Toyota Camry, Toyota has a price-to-earnings ratio of 9.35. Again, Tesla's 1,210, Toyota is 9.35. And Toyota also has an earnings per share of $16.39. Now, let's look at the price-earnings ratio of the best-selling truck in America. Well, it's not available for Ford because it's not profitable. But there is an earnings per share of -4 cents. All right, so let's just take one more just to give you an idea of how Tesla compares to competitors. The PE ratio of GM is 18.68, and it has an earnings per share of $2.23. So just strictly looking at the PE ratio and the earnings per share as a fundamental analysis, one would conclude that the best company to invest in, based on profitability and potentially being undervalued, would be Toyota. But we all know this is not why people buy Tesla stock. People have other reasons. Some like that Elon is a visionary and his goals stretch far beyond as an automaker. They see the potential increase in adoption of electric vehicles across the globe, not just the US. They also see Tesla growing as a provider of energy beyond vehicles. They see it as a battery maker and perhaps one day participating in space travel and space mining. How do you measure the value of this potential growth? How do you measure how profitable these expansions and ventures will be? It's hard to do because no one's done it before. It's hard to project at the infancy stages of these endeavors. If you were to ask Alan Greenspan, what would he say? He would likely argue that irrational exuberance has set in. Investors have unfounded market optimism about Tesla's prospects. The reality is that time will only tell. It is speculation and hope that Tesla can execute flawlessly in years to come to achieve its goals. If it can, then you could argue that it's undervalued, and you're going to make a killing in a decade. But if it can't, then fundamentals lead us to believe that stock is dangerously overvalued, and better alternatives exist for building wealth in the long term. If you take nothing else away from the things that we talked about today, please consider this. Please do not overexpose yourself to Tesla. And if you do invest, please consider a long-term strategy beyond a year. In order for the current price to justify its recent price appreciation, it could take years or decades for the price to warrant its profitability. I hope you learned something new today, Wealth Builders. Please comment below. Am I completely wrong and blind to the vision that Elon has? Or has this allowed you to consider things like the price to earnings ratio or earnings per share as additional factors to consider? Little Piggy will greatly appreciate you liking this video and subscribing. Thanks, and I hope you have a great day.